Hi everyone, this is Johnny again, and I'm here to record this video to show you how to trade the Heiken Ashi candles using the 4-hour time frame with, of course, higher time frame confluence. So I'm trading this now on the 4-hour time frame, but I'm referring to the weekly time frame for overall directional bias. Okay, so let's start first by defining what a Heiken Ashi candle is and what it's for, and what are the benefits of using the Heiken Ashi. So, quick answer: the Heiken Ashi is basically called an average bar. So it's a Japanese charting technique that smooths out price action to make trends easier to spot. Okay. So each bar is basically calculated using the averages of the open, the close, the high, and the low, rather than plotting raw data like the usual Japanese candles. And in the usual Japanese candles, you can see bullish or bearish interchange. So often with the Heiken Ashi, since it's an average bar, then you'll really see and spot the trends in the direction a lot easier. So Heiken Ashi is more for traders who are visual and prefer a trend follow strategy that is very mechanical and easy to follow. Okay, so things that we need to have on the chart if we want to trade this, at least using my Heiken Ashi strategy. Again, I am not endorsing any specific strategy, but simply I'm showing you this for educational purposes. And if this suits your personality, your behavior, your lifestyle, and your patience level, then please feel free to use them. Okay. So we need the Heiken Ashi candles. Go to your trading view or your MetaTrader 5 or whatever platform you use for trading. I'm sure you'll find Heiken Ashi. Okay. Red is for my bearish Heiken Ashi candle. Blue is for the bullish. Okay. I also have MACD with a special setting of 821.5. Okay. So how do we trade this? So once you have established a overall directional bias in your weekly time frame, you want to be looking for entries in your 4 hours. Okay, so ideally, in this case, we are bullish in the weekly time frame, and I want to be looking for buys. So I want to start by looking at the MACD and the Heiken Ashi candle. So I want to see a bearish move, of course, to the downside like this, and I want to be able to spot a flip in the MACD, okay, from bearish histogram to bullish histogram, okay? So once I spot this retracement or pullback in price action, I want to be able to see at least 4 or 5. I prefer 5 bearish MACD histogram. So that's 1, 2, 3, 4, 5. Okay, that says, the shortest possible bearish move in the MACD that I would take. And I would take it when it switches back to bullish. Okay. So once I see this bearish move, 1, 2, 3, 4, 5, 6 right there in the MACD, okay, I would then look for a histogram flip to the bullish side. So now this candle right here is a green MACD, so it's now above zero. And this tells me that price action may be switching bullish. Okay, so once I have this bullish MACD, I would then count 3 consecutive bullish Heiken Ashi candles. Okay, 3 consecutive from the time that the MACD histogram switched to bullish. So from here, then I want to see Heiken Ashi candles with no down wicks. You'll see that these Heiken Ashi candles, they have down wicks because they're very bearish. Now, I would like to see some Heiken Ashi candles, 3 consecutive Heiken Ashi candles from the MACD histogram bullish flip, okay, without downward wick, like 1, 2, and 3. Okay, you'll see that even though this is bullish, some of them would still have down wicks. Okay, so I don't like these. I like 1, 2, and 3. Now, once you see 3 consecutive bullish Heiken Ashi candles with no down wicks, we will then set a buy order at the 50% level or a little above the 50% level of the Heiken Ashi because this is an average bar. So more or less it would hit this level right here. Okay, once the next candle opens. So again, flip here, 1, 2, 3 consecutive one. We set a buy order right here, buy limit order. Okay, or if you want, you can also do market execution, but that would, of course, make your RR or risk to reward suffer since you've already uh, wasted some time waiting for the 3 consecutive candles. Okay, stop loss below the swing low, the last bearish Heiken Ashi. Now you'll be dividing your take profit into 2. The first one will be a 1-to-1. Okay, so you can bank profits right away. Okay, and the next one will be a 1-to-2. Okay, right there. Okay, so it's a trend follow strategy. So the first one is a 1-to-1, bank that profit, move your stop loss to break even, then let the remaining position, may it be 40% or 50%, run towards the next take profit. Now you may be able to see if you're late in this entry, you may be able to get in once you see another bearish MACD, at least 5 of these MACDs consecutively. Okay, and then wait for it to flip again right here. So once it flips, you then have to look for 3 consecutive candles, bullish HA candles with no down wick. Now you can allow yourself at least 2 false starts, like this one. There's a bullish flip, but this one is still bearish. And this one right here, okay, this one is bearish and this one still has a down wick. So you can allow yourself 2 false starts as long as you see the 3 consecutive Heiken Ashi bullish candles with no down wick within 5 candles, okay? That's a strict rule, okay? You're allowed 2 false starts and you need at least 3 consecutive HA bullish candles with no down wick within 5 candles. Okay, so this is within 5, 1, 2, 3, and enter a buy limit position right there. Okay, stops below this low, 1:1 for the first TP. Okay, once that first TP is hit, moved it to 1:2, and that's hit again. Then repeat the same process. Okay, get in if you see a 3 consecutive bullish candles. So allow yourself 2 false starts. 1, 2, 1, 2, 3. No, not that. So you got no entry there. How about here? Okay, you got 1, 2, 1, 2, 3. No, that's also no. Okay, here's another one. We're still bullish. So you see here 1, 2, 3. 1, 2. No, that's also a no. Here's another one. 1, 2, 3. So that's also a no. Okay, but tell you what, you've entered a 1:1 here and a 1:2. If you're trend following, you have 2 options. It's either you take the 1:2, which is the second partial profit, or you can basically run with it and just trail your profits every time price makes a higher low and a higher high. Okay, so that's the Heiken Ashi strategy for you. Now you do the opposite for bearish markets. Just make sure you refer to the weekly time frame. If the weekly tells you to be bearish, then you can look for sell or opportunities in the 4-hour time frame. Okay, so I hope this video helps, and join my platform 15/25. I'll include the link in the description for more education materials. Thank you. Bye.